Hello and welcome. This is Market View, the last episode this week. Thank you for tuning in. My name is Zongilele Makakula. To watch us on our YouTube page, Eswatini TV, as well as DSTV. We are there on channel 286. Welcome once again. More and more parents are taking out loans to pay school fees for their children as school season has already kicked in. The rise in borrowing is being attributed to the financial strain that the school-going season places on households. The Eswatini Credit Providers Association has seen more Emaswati coming in to borrow personal loans this month. And according to an article by Sam Barker on This Is Money, an online newspaper in the UK in 2023, in the UK there was also a sharp rise in parents taking out loans to pay their children's school fees, with the different credit providers charging different interests to their clients. Business journalist Nelson Wintlangamandla had a conversation with the chairperson Tulani Dlamini to gain an insight on what informs these varying interest rates. Then later on our last segment, we'll be joined by Sanela Sbia for today's financial markets. In our business news today, the leading story, the Ministry of Commerce is set to advocate for priority payment terms for small and medium enterprises in the review of the country's Procurement Act of 2011. Let's go straight to it. Welcome back. Let's go to our first story. The Ministry of Commerce is set to advocate for priority payment terms for small and medium enterprises in the review of the country's Procurement Act of 2011. If this is incorporated into the law, it will be a game changer for businesses that have long struggled with late payments by government and different entities, impacting their cash flow and growth. The Director of Small and Medium Enterprises at the Ministry, Mluleki Dlamini, has shared more of what they would be submitting to the Ministry of Finance as the law is being reviewed.
You'll recall that we've got the Citizen Economic Empowerment Act, which also speaks to issues of preferential procurement. That is the area that we'll focus on mainly, to say that we'll be pushing for a percentage reservation for local enterprises in terms of benefiting from procurement, and also reservation of certain sectors that should be reserved for local businesses as a way to empower our local enterprises. And we'll also be touching on also issues of maybe prompt or priority payment of our micro, small and medium enterprises as one of the elements that needs to be addressed in the legislation. But obviously, I will want to call upon all businesses in the country to also be proactive and take this initiative to submit their comments on time, because they are the ones who are affected by maybe some of the challenges as they continue with their procurement.
The chairperson of the Citizen Economic Empowerment Council, Lincoln Mota, says the review of the Act will make it easier for the council to monitor implementation.
It will go a long way in assisting more, especially the small, medium enterprises. And as far as it is concerned, or with, sorry.
Take two, it's okay.
Okay, sorry.
You're doing great.
Okay.
Angithi uthent direct usisibuke enforcement.
Yeah.
Is it enforcement? Yeah, the
Okay.
compliance, yes.
Okay. I think it is going to help us as the Citizens Economic Empowerment Council, because it is in line with the mandate from the Act, mainly when it comes to compliance issues. Once everyone is submitted, it will be their submissions. It will be easy for the council then to monitor compliance in all the organizations, more especially all the government agencies or state-owned companies that are involved in the procurement, to make sure that they comply with the Act. And of course, the submissions that have been submitted by the general public and private entities. So it will be crucial for the benefit of all medium, small enterprises, in as far as making sure that these initiatives empowers and also they benefit from it.
Business organizations and stakeholders concerned have until Monday next week to make submissions to the Ministry of Finance on the review of the Procurement Act of 2011. For Market View, Nelson Ngamandla from Inkosi Nzinisa Mbabane.
Small and medium enterprise federations have applauded the Ministry of Finance for the action of reviewing the Procurement Act of 2011. The Business Federation of Eswatini and the Federation of Eswatini Business Community say small-scale businesses should also be made a priority in tender procurement.
The Minister of Finance says stakeholders should grab this opportunity with both hands as it is meant to change the procurement landscape.
Public procurement plays a crucial role, first of all, in service delivery, in driving economic growth, and in ensuring good governance. The Procurement Act that we have is the Act of 2011. It has served the country for over a decade, but there is a need to update and strengthen it to align with current economic and governance realities. We therefore invite all eMaSwati to participate in this review by submitting their contributions to the Ministry of Finance.
Local business federations have weighed in on the review, sharing that local companies belonging to indigenous eMaSwati should be made a priority when tenders are being awarded, especially if they have the means to do the work.
The Public Procurement Legislation Review initiative is most welcome by FESPIC. The members have in the past faced several challenges, and these include the following. The first one being the delayed payments. FESPIC would love if there can be terms and conditions which will be honored by all parties. If it's 30 days from invoice date, then that should be respected and honored. Lack of assistance in tracing invoices. Sometimes the MSMEs run around trying to track or trace their submitted invoices, and this becomes a problem. At the end of the day, maybe they are not able to get help, they are not assisted. So what we propose is that if government can have or appoint some officers within ministries or departments who can play the role of being expediters, who can assist, who can be the contact office for the MSMEs so that they can be able to track unpaid invoices. The other request that FESPIC would puts forward is if government can have an annual procurement plan. This will enable the MSMEs to plan for the tenders still to come. And also it will allow them to better equip themselves. The other challenge which MSMEs have faced in the past include the delayed time between advert and contracts that being awarded. You find that when the adverts are made, the SMEs do their own homework and get the prices and everything. By the time the contracts are awarded, things have changed, and this doesn't work well for the MSMEs.
Thina singama-SMMEs sibuka kakhulu ukuthi akukhulunywe nje ngalama-citizens kakhulu ngoba nase sitawufakwa na Swati companies uthola ukuthi mhlawumbe ngilabanye lababhicane bekuhamba kanti nangabe nje sitawuthi citizens ama-citizens amane anikedwe nje noma i-preference ya 20% uma ngabe kwendiwa labo evaluation nalokuthi kwendeke phela kungabi into lehleli nje ephepheni kuphela nako lokho sitawuzama ukukhongosela ukuthi alandzeleke nalama regulations alomthetho ukuthi kutokhonakala ukuthi asitakale lamaswati.
All business federations have promised to make their voices heard through submissions that will help benefit businesses in the procurement industry. For Market View, Nelson Ngamandla from Inkosi Nzinisa Mbabane.
And that marks the end of our business news. After the break, Nelson sits down with the chairperson of the Eswatini Credit Providers Association. Don't go anywhere.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.sz. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
Welcome back. Thank you for staying with us. As school season has already kicked in, many families are finding themselves turning to credit providers to make ends meet. The rise in borrowing is being attributed to the financial strain that the school-going season places on households. The Eswatini Credit Providers Association has seen more Emaswati coming in to borrow personal loans this month. With the different credit providers charging different interests to their clients, business journalist Nelson Dlamandla had a conversation with the chairperson Tulani Dlamini to gain an insight on what informs these varying interest rates.
Chairperson, has there been an increase in loans this January, and what kind of loans are in demand?
Is a lot of parents, guardians going for educational requirements, and therefore they have to pay school fees, tuition fees, and other related elements. And therefore, definitely, even if we look at previous periods, this is normally the peak in terms of the 4 quarters within the year. Every year, within January to March, there is an upswing in terms of loan applications. Economic conditions play a significant role in loan demand. When times are tough, more people turn to credit. And therefore, for instance, right now, we're talking of school fees and household needs. And therefore, it is very important that both parties, in terms of the lender, which is us, as well as the client, to make sure that we advocate for responsible borrowing and lending, so that people do not become financially overburdened over time. So we have to make sure that a thorough onboarding process and due diligence is taken care of. In terms of what we do, being the guys in the microfinance space, we normally focus mainly on personal loans, which normally ranges from across industry, from 2,000 emalangeni all the way up to 500,000 emalangeni. And therefore, with such an amount, one can do almost anything that he or she wants to do.
As you have said, Chairperson, that most people have come in to borrow loans this January, I just want to know who determines how much a credit provider should charge, because you have one credit provider charging maybe 20% and another charges are maybe 24%. What happens there? Do you have a way to monitor that?
Okay, first of all, let me explain and say that in terms of pricing, definitely each and every entity sits down, gets to decide on its actual pricing. And remember, as industry, definitely it's not in our space to discuss such amongst us, but it's upon each entity. And this, in a way, sits well within the regulator space in terms of saying, within industry, these are the brackets or tiers where you can charge within. And therefore, we charge differently. But of course, we are waiting for a notice from the regulator in due course, and I'm sure it's about to go to Parliament, where the regulator will actually specify the parameters in terms of pricing for the microfinance space. So it's coming through soon.
So you are saying there's currently no guideline to monitor how much the credit providers should charge? Currently,
there is a draft notice that was circulated by the regulator. And those are the parameters that we are currently using as industry. We are waiting for the final adopted pricing ranges that will be issued by the regulator.
You are saying there is a guideline. What does it say about the interest? How much should it be?
In terms of the last draft, that was, maybe it's better also to ask the regulator in terms of that, because this is something not yet finalized. Once the final draft has been issued, it's only then it can be advised accordingly. But in terms of the current setup, the last draft went up to overall charges up to 24% within industry per annum. That was the last draft that we have.
Inflation is hitting eMaswati hard, Ngozi. This is evidenced by non-performing loans when we look at the banking sector. Are you doing something as credit providers to cater for this, to cater for people who are struggling, but they also need the money from credit providers?
Okay, let me start by saying, in terms of that area, as industry, we promote what we call financial literacy. So, meaning for any client, before he or she gets to come through a lender, he must make the correct financial decisions in terms of making sure that indeed that facility is required. And also, as we sit down with that person, we have to make sure that the client is not fully over indebted in terms of what is required as the facility. Obviously, in terms of interest rates, there are a number of factors that comes into issues. In particular, one, inflation. That's one of the factors there. And from our end, we do believe as entities, we are engaging the clients, in particular at the onboarding stage, where we get to fully assess affordability for the client. And that is how we work.
What is it that you are doing to ensure that people borrow within their means?
The main thing is to do a formal and a full onboarding assessment to make sure that the client is able to afford the installment or repayment amount. In the event he or she gets to have challenges, and then the client gets to sit down with the entity in question, where options like the debt restructuring process gets to kick in, and hence improve probably the take home for the client.
Thank you, Nkosi, for joining us on the program. We are hoping that you will find a standard interest rates that every credit provider should charge. Kude eMaswati asizakale kangcono angadikhanzi sekakhameka ngendzaba yetikweleti.
All right, the Financial Services Regulatory Authority has responded to say the Consumer Credit Act doesn't stipulate the interest rate to be charged by credit providers. The FSRA is awaiting the approval of CCA regulations by Parliament, which will have a section on how much interest can be charged by credit providers. They say currently they rely on the credit agreement, which is essential for establishing trust and ensuring that both the borrower and lender are on the same page regarding the loan's terms. They say it documents all the essential terms of the loan, including the interest rate, repayment schedule, fees, and any penalties for late payments. The authority is also in the final stages of completing a survey on pricing by credit providers, which will serve as a key reference in formulating regulations on the total cost of credit. After the break, we connect with Sanele Sbia for today's financial markets. Don't go anywhere.
Be sure to catch Business Watch every Wednesday between 2 p.m. to 3 p.m., where we feature the latest updates on business news, market trends, and exclusive interviews with industry leaders, as well as insights on emerging small and medium enterprises in the commercial sector. Business Watch, your business leader.
Welcome back. We are 20 minutes into the show. Thank you for staying with us. We now connect with Sanele Sbia for today's markets. Good afternoon, Mr. Sbia. Thank you for joining us. Perhaps we can start in the U.S. U.S. stocks rose today. Is the dollar firm this afternoon?
Thank you, Lungelele, for having me on the show, and good afternoon to the viewer. Yes, looking into the futures market, it does show that the markets are somewhat rebounding to yesterday's losses. What we saw yesterday was, the Federal Reserve Bank actually kept rates steady. That's amidst a lot of the uncertainty that we are looking into with a Trump presidency. We don't know how the tariff story is going to go, and we just don't know quite a lot of things. And we've seen the role on international aid, and we've seen quite a bit of a disruption coming through from a Trump presidency. The first few couple of weeks. So that's what markets are now mulling and are looking at. And what we are seeing right now is, if you look at the chart, it shows that the Dow Jones Industrial Average lost some 136 points in yesterday's trade. The Nasdaq Composite Index actually lost another 100 points in yesterday's trade, with the S&P 500 losing just 28%, some 28 points. So what markets are trying to factor into this whole story is, are we going to see a change in the monetary policy trajectory in the US? Because we've seen where markets were pricing in a bit of a cut in interest rates just before the Trump presidency takes full effect, and we've seen the Federal Reserve Bank holding those steady because there are those tariff worries in terms of what that would do to inflation. So that's why we're seeing the US markets responding to. Over and above, we've seen China coming in to disrupt that tech space, that AI space, and we've seen they've done quite a remarkable work with within the chip sector and within the artificial intelligence sector. Really just coming up with an artificial intelligence that works in a very short space of time, in kind of some record time. So that's what we're seeing markets trying to mull and see how that is going to actually affect the economy overall. So we're expecting a bit of a relief in terms of demand, where we expected the interest rates to go down a bit, but it seems the Federal Reserve Bank kept that rate steady in anticipation of what the Trump government would do. As it were, we do not know what the tariff trajectory it is that we are going to see, but we do know there is a study being conducted on what the optimal tariff would be for the US. I think that's what we saw in those executive orders coming through from the Trump presidency. So with all those uncertainties, that's what markets are trying to react to. And more especially within those in the retail space, your S&P 500, we're seeing that happening. What that means is you are going to see a bit of a slowdown in demand, because we did expect the interest rate cut to somewhat work towards improving overall demand in the markets. So that's why we are seeing happening there. But still, we still have a bit of earnings coming through from the tech sector, sort of what we call the calm before the storm. And then when you move across the pond in London, in the overall Eurozone, what we're seeing there is a bit of diverging views in terms of what the interest rate trajectory ought to be, right? We do expectations are Europe is actually going to cut rates, and the very same is expected of London to happen, to follow suit. So we're seeing these two juxtaposed positions from these two continents. Just when you move across the pond, you find that there is some optimism around rate cuts, and then when you move into the US, it seems there's a bit of that stalling in the interest rate. So we're seeing London, performing very well, gaining some 23 points in today's trade, as of when we quoted the numbers, and we're seeing Germany again gaining some 69 points, staying on that 21,000 mark. And then France, that's the story we've been looking at, whether France was actually going to retain that 8,000 mark, and now we had just 100 points below that mark. We are now at 7,906.76 in terms of the trades in France. So we're looking into the government stimulus, that that rate, that bond float that France is actually that they've actually floated. That was one that they've not floated in a very long time, but right now it's coming into the markets, and the markets are actually receiving that one very positively, and also the bit of stability that President Macron has been able to infuse into the markets together with the new Prime Minister. So that's why we're seeing France really just edging back to that 8,000 mark. And if the projections go by with the euro, the ECB, the European Central Bank, cutting those rates sometime next week, so we should expect to see France, Paris getting back to that 8,000 mark, bringing in a bit of stability within the eurozone. And then when you go into Japan, we can see that when you go into Asian markets, we can see that the New Year, those New Year celebration have somewhat infused some positivity into the markets, and we're still at those all-time highs with the Nikkei really just edging closer towards that 40,000 mark in terms of overall trade volumes. Just getting some 99 points in today's trade, and then with the Hang Seng still sitting there at around 20,000. Again, that's purely because the markets are trying to factor in what the impact of those rates, holding the rate steady, is going to be. And we can see that these two regions where the tariffs are not likely to impact, not unless we go for that 10% across the board, which President Trump is proposing. You can see that those markets are failing relatively well because those tariff fears don't border much on them. But when you come into the mainland, when you look into Beijing following the Shanghai Composite Index, we can see that we've lost just a bit. Again, it's those tariff worries. And, the fact that the Federal Reserve Bank held the rate steady somehow signals that they know something the world doesn't know. They know that the tariffs are coming, and those tariffs are likely to be inflationary. So that's what we're seeing happening in Shanghai. They just edging down a bit because of after following that announcement to hold the rate steady. And then when you come into the South African markets, again, we're seeing some positive growth there in anticipation of we do know that we've seen South Africa's monetary policy come out today. So that's what markets are just trying to price in right now, that cut and that improving demand. But more to that story is the fact that the GNU is still holding even after those controversial bills that the ANC has signed into effect. It was the land bill and that education bill, because we somehow thought those were going to be those sticking points, as that's what the DA had said when they were going into these negotiations of this GNU, that those are sticking points. That's when they would really pull out. But we've seen them keeping steady and holding the GNU together. So that somehow breathes life into the markets. And we are waiting to see the State of the Nation address still goes on ahead. And we're going to start getting a bit of a feel in terms of where this GNU is going. But the fact that it's holding steady, that bodes well for markets. And then when you come into the domestic front, we are not seeing any changes. It still remains at that 489.12. And then moving into commodities, Lungelele, what we are seeing is because of that uncertainty with the interest rate in the US, where the world is now trying to figure out where the interest rate territory for the Federal Reserve Bank is going to go, gold has actually edged up a bit to that 2,794.90. And as long as this uncertainty persists to hold in the market, we should expect to see gold edging closer to the 2,800 mark. And if it stays on the markets for a bit longer, we should actually see another all-time high where we would see gold going into the 2,900 mark. So we do expect the Trump presidency to start shaping up and giving us more direction and more clarity for markets to start stabilizing and really just moving us into the direction that we want. And then when you look into the price of Brent crude, as we've been predicting, it's back on that $75 per barrel, 75.39. That's because we have a lot of stability within the Middle East and, the effects of the US drilling and that rate being held steady somehow signals that demand might not be as strong as we would want it to be in the future. So that's why those futures in that Brent crude price are showing that slight decline there. And then when you come into the currencies, you can see that we've lost a bit of ground against the dollar. And we've gained a bit of ground against the euro, and also we've lost a bit of ground against the Japanese yen. So what we're seeing there is the 10-year bond yield within the US market also edging up a bit amidst this uncertainty that President Trump brings into the market. Lumelele, thank you.
All right, thank you, Mrs. Bia, for that analysis and your insights, always appreciated. And that's it for our last segment. That was our last segment for today's Market View. Thank you for tuning in. This was the final episode this week. We'll see you once again next week, Monday at exactly 2 p.m. Enjoy the rest of your day. Salam.